This is the Retirement Key Podcast with Abe Abich, founder of Abich Financial Services.
Thanks to the OBA, there is a tax break for people over the age of 65, a new tax break in the year 2026. But does it apply to you? This is Abe Abich, founder of Abich Financial Services, financial advisor, helping folks all around the D.C. metro area figure out how to plan for retirement. And this is what we're going to ask Abe to clarify for us today. I'm Heather Branch here asking Abe about this tax break for seniors. By the way, theretirementkey.com is our website and where to go to begin the conversation with Abe and his team at Abich Financial. We've also got links posted in the show notes. So the One Big Beautiful Bill Act says that anyone 65 or older can claim an extra deduction. That's a $6,000 additional deduction for singles, $12,000 additional deductions for couples. This is on top of the standard deduction, which, I mean, this starts to add up. This is a nice perk for seniors, Abe. Yep. However, it doesn't necessarily apply to everybody, does it?
It doesn't. And you will phase out depending on your income level, but it will help a lot of people.
Okay.
So, it can provide tax relief for seniors, and it is new in 2026. And again, $6,000 in additional deductions for singles. Again, you got to be 65 or older. $12,000 in additional potential deductions for couples. Again, coming on top of that standard deduction, and existing age-based add-ons as well. The extra cushion, the extra deduction could help to lower taxes, taxable income in retirement. It could maybe even reduce a tax bill. You know, what if you didn't pay as much taxes as you should throughout the year, and you had a tax bill of several $1,000s, and then you add on this deduction, and maybe it wipes out that tax liability.
Yeah.
You never know, but it could. So it can also flip a tax bill into a refund. So especially if you've got modest income, I don't know, 50K, 100K, steady withholdings, right? This additional deduction may push taxable income below that key threshold.
Got it.
And so that shift can turn what would otherwise been a payment into a refund.
Got it. All right.
Yep.
So that's kind of the 101 of this deduction and this opportunity for 2026. What other benefits are there to maximize in 2026, or I guess beyond, because that's another big area that you focus on in Abich Financial. It's not just this year's taxes; it's the taxes for the many years to come throughout retirement, working to reduce what we might owe there. Yep.
And again, these deductions, the senior deduction can stack and add on to other deductions that you might have. But there is a phase out, period. So let's talk about that. Full deductions are available for singles with modified adjusted gross income under $75,000 and for couples under $150,000.
Yep.
Phase out starting above those levels, ending at $175,000 if you're single, ending at $250,000 if you're married. So a lot of people fall within those limits and below those limits. Now, there are people that have income higher, but if you're able to stay within those limits, and I would say a lot of people do, you might be able to maximize your benefits and maximize those deductions. So hopefully that helps. If you're watching right now and you want to learn more about deductions and strategies for 2026, you ask about additional tax planning, Heather, and things that we do here at Abich to help people with taxes in general. Well, Roth conversions are, pretty big buzzword over the last, I don't know, at least 5 years, especially when the tax code changed back in, I think, 2021, I believe it was, for the first time. And now that it's been extended as well, the One Big Beautiful, Tax Bill Act, taxes may never be lower than they are today. They may never be lower than they are today. So a lot of people are concerned with the country's financial debt, as an example. I think it's approaching $40 trillion in national debt. If you go to usnationaldebtclock.org, you can see it like going up by the second, and it's kind of scary. But
do not go to that website if you are quickly induced by clocks counting down, or in this case ticking up, because to watch it, you will sit there and stare at it. I've done it, Abe. It's not healthy.
Yeah, it's approaching $40 trillion. So, it has a lot of people concerned, like, well, is the country even going to be able to continue to pay it down? And so much of the country's, revenue and income coming in is going to service the debt. And then you see things like gold and silver going up, and maybe the dollar starting to become worth less and less. You just wonder. A lot of people tend to believe that taxes will be higher down the road than they are today. Again, taxes are pretty darn fair. I mean, you're at the 10, 12, 22, or 24. Most people fall in those kind of 4 brackets. You got to be making a lot of money to enter into the 32 and higher, tax brackets. So, the majority of people we find that we meet with across the DC metro area, especially, are keeping typically 80+% of all the income that comes in the household. In other words, maybe 15, 20% is going out to tax. And in my personal opinion, in our opinion as a firm, we believe that's pretty fair. But what if taxes went up on us, right? What if taxes go up down the road, and then, you're getting close to retirement, you're in your late 50s, 60s, 70s, and you've got plenty of money saved. You've worked so hard to get there. You've got $3, $5, $7, $10 million accumulated. You bought into that myth that we talk about so often here on our podcast, that when you retire, you're going to be in a lower tax bracket. We believe it's one of the biggest myths of retirement planning. Simply because you're not working anymore, you're in a lower tax bracket. Well, that's what a lot of people were told at the water cooler as they were opening up their 401k, as they continue to max it out year after year, getting those matching contributions. Now just max it out, Heather. Max it out now. Take the tax break now. When you retire, you're going to have lower income. You're not, you might not even have a lot of money. You're going to have lower income. You're not going to be working. Of course, your taxes are going to be lower in retirement, right? Well, for so many people that we meet with, especially across the DC metro area, that's not the case, especially for those people who have pensions, sometimes 2 pensions, Social Security checks, and then you stack $2, $5, $7 million on top of it with forced required minimum distributions, maybe some rental income. You sell a home 1 year, you get an inheritance, all kinds of taxable situations that arise. And for a lot of people, they're going to be in higher tax brackets and be paying a lot of tax down the road. Yeah. So taxes are one of the biggest reasons that clients kind of join our firm, is because they realize, well, I did a great job of saving and accumulating, and I have the money that I need to retire with confidence. I do want to pull the trigger, Abe, and I want to retire, and I want to never look back, but I want to protect my wealth. I want to protect my life savings from the biggest risks that can mess it up. One of those being taxes going up and impacting your dollars, having less dollars come into your bank account, having less dollars, fewer dollars pass on to your children, grandchildren, and loved ones of your choice, charities, in the most tax efficient way. Yeah. But we want to, help our clients accomplish their goals and objectives and do it in the most tax efficient way. Protect against risks that can really mess up a great savings plan. Yeah. And one of those is higher taxes.
Yeah. Let's talk quickly about timeframes on things, because something else that we say a lot in your radio shows, on this podcast platform, is a time frame of people will hear also, if you're age 55 or older, if you're 59 or older, if you're 5 to 10 years from retirement. Because when it comes to planning for taxes, a lot of people I know that when they are approaching retirement and they seek out the help of a professional like you, like at Abish Financial Services, they'll come to you 6 months before they plan to retire, or maybe 6 months after they've retired. And they say, okay, we're retired, so we're ready to get to work on our plan. With taxes in particular, the benefit of coming to you 5 years before you plan to retire. Speak to that.
That can be really helpful. Because, most of what you've done, most of what you've accumulated is done. It's there. Like if you're coming to us 6 months before you retire, or a year or two before, or you're already retired and then you're coming to us, fine, we can probably still help you. But if you've got 5 years or more in front of you, and let's say you're 55 and not planning on retiring to 65, you're 60, not planning on retiring to 67 or 70, that's a great situation, right? Because we've got time, and oftentimes we'll meet with a lot of our clients 4 times a year. Let's say you're retiring 5 years from now. That's 20 meetings, 20 opportunities at a minimum that we can talk to you about tax planning. And should I max out my 401k now, Abe? If one of my biggest concerns is taxes going up and we want to pursue Roth conversions and tax strategies, should I max out my pre-tax side, or should I just put it in the Roth? Because it's going to end up going over to the Roth eventually, right? Should we beef up our emergency funds, as we're getting closer and closer to retirement versus putting more money in the 401k? How much of a Roth conversion should we do, right, each year? Does it make sense to do it now while income might be at its highest versus waiting for one of us to start working part-time and things like that? All kinds of discussions around taxes. And we have tax planning software where we can run a lot of the situations through the software, throw numbers in to give us an idea. Hey, here's where our clients are right now. Here's the tax bracket you're likely in. Here's the taxable liability you should be aware of. that you have right now. But if you purposely started shifting dollars over into Roth, did a conversion of $50,000, $200,000, or whatever it is, here's also what that would look like. So our clients have a good idea, and then they can make an intelligent, educated decision. And then finally, run that by a tax professional to verify that it's the best thing for our clients as well.
Yeah.
So a big thing here at Abish is tax planning mixed in, combined with a comprehensive retirement plan. It's so important. Don't ignore it. Don't just hope. Taxes are never going to go up on you. Don't just hope that taxes might be lower in retirement than higher. We should be planning for the worst, right? And we should be planning for taxes to go up.
Yes, we need to factor that in with things like the debt, Social Security, insolvency crisis, that looming, what's going to happen there. There's a lot of unknowns. Right. But one thing that we do know as of the date, we're January 2026 when we're recording this podcast, Abe, one thing we do know is when it comes to taxes, you don't just have to take it. You don't just have to take what Uncle Sam is given to you in the face, which is another misconception. I think a lot of people, there's like, well, it's just taxes. I have to pay it. There's nothing I can do. That's not, don't think about it that way. There's a lot of things to do. Yeah.
That's not the answer. There's a lot of tax strategy out there. You just need to be aware. You need to know the rules of the game. You need to understand what's available to you. And again, a lot of simple things that people just aren't taking advantage of. Maxing out 401ks, maxing out HSAs, all kinds of things. Kinds of things. And a lot of them simple.
Just do the Roth conversion thing, know if that, know what you're doing, because you can actually harm yourself tax-wise with a Roth conversion done wrong.
Correct.
There's like you said, so many simple things, but also simple things you can mess up.
Yeah. So these are ways that we help our clients here at Abish Financial.
Yeah. Another way that you're helping folks, Abe, is educating, informing through your book, The Retirement Mountain, The 7 Steps to a Long-Lasting Retirement, Chapter 15. Build a tax strategy. It's written right here. The good thing about this book that I like so much is that it's short and sweet because, when it comes to a lot of financial books we see out there, there's like it's this Bible thick, and it's just like, it's very intimidating. But you've taken the time to simplify it into about 100 pages, an easy read on a Saturday afternoon, a Sunday afternoon. And like I was saying, tax strategy, one of the chapters you dedicated in this book to this information.
That's right. It's important to us and definitely important to our clients.
It's important to you, I know, to empower people with information. So working to do that, if you want a copy of Abe's book, you can get it. There's many different ways to get it. Anybody that comes into the office for a meeting will get a complimentary copy. There's digital versions, audio versions you can download on Amazon. You can download a free PDF digital version. We've got links to all of those things posted in the show notes. Also, visit us anytime, theretirementkey.com. If you've got questions about how this OBA tax break could benefit you, let's get to work helping you figure out that break, but also all the other simple things like Abe was talking about. How do they apply to your retirement, to your savings, and to your retirement plan for the years ahead? Working to help you reduce what you have to hand over to the government is the goal of this tax plan review that Abe and his team ready to get to work on for you. So click on the links. Go ahead.
The tax code is there for you to take advantage of.
That's right. Don't let it take advantage of you. The other way around. Right. Obviously, as Abe was saying, there's lots to understand, though. And so if you want somebody to go through it with you, what options are available to you, let's get to work helping you understand that. Click on the links got posted in the show notes, or it's theretirementkey.com.
Thanks for listening to the Retirement Key Podcast with Abe Abich. To learn more about Abish Financial Services, visit theretirementkey.com and join Abe for his radio show, The Retirement Key, Saturdays at 8 a.m. and 2 p.m. and Sundays at 8 a.m., 2 p.m., and 5 p.m. Abish Financial Wealth Management is a registered investment advisor with the SEC. Registration as an investment advisor does not imply a certain level of skill or training, and the content of this communication has not been approved or verified by the United States Securities and Exchange Commission or by any state securities authority. The information contained in this material is intended to provide general information about Abish Financial Wealth Management and its services. It is not intended to offer investment advice. Investment advice will only be given after a client engages our services by executing the appropriate investment services agreement. Information regarding investment products and services are provided solely to read about our investment philosophy and our strategies.